Now, right here, you can already see that gold is very bullish. So this whole price action down here, it was just pure manipulation and retracement. The fall price will still continue higher. And right here, already we came down into an imbalance. We have multiple imbalances here. Now, I'm not trying to predict that the low is in, even though I think the low is in. But I'm not trying to predict that the low is in. So price came, mitigated this position and broke a 4-hour high. So when it broke this 4-hour high right here, this is the overall high. After it broke this 4-hour high, the only thing I would like to see from this kind of position would be a retest, right? Now I'm looking at this price action. This is basically a two-faced price action. And the reason I say it's a two-faced price action is because of this. So what I did was I just took short-term trades. I didn't want to hold any trade longer, and I didn't want to decide that the high is in or the low is in. I was just focusing on this range high, range low. Already, the market has broken structure to the downside, showing me that at least temporarily the high is in. And then the market broke structure to the upside, showing me temporarily the low is in. Does that make sense?
Mm-hmm.
Awesome. Now, the next thing I do is to use my Fibonacci to know where we are. So I'll know where I should be looking for buys and where I should be looking for sells. Now, you mark that out. This is equilibrium. Anything above equilibrium is premium. Anything below equilibrium is discount. Price came up to this position into premium. Now, I don't want to jump into conclusion and start taking any trades. I want to see a significant break of structure to the downside for me to look for a sell. And it created a high, created a low, created a high, broke structure on the 4-hour time frame. After I saw this break of structure, the next thing I want to do is, let me just move this back. Now, after I saw this break of structure, I'm not going to just jump right in and place a limit order here and sell, because as much as this is a 4-hour break of structure, I still don't trust the trade. So now I start looking for points of interest where I'm going to sell from. And the first thing I saw here was low, high, last up close candles right here, which is also known as an order block, imbalance. You mark the imbalance. And right here, you can see, let me zoom this in. You can see how price came up there, took liquidity from here. Can you see that?
Yeah.
And after I took liquidity, all I want to see is a 5 minutes break of structure from that position and look for sell opportunities to go to the downside. And right here is the 5 minutes time frame. And you can see right here, price came to the downside, created a low, tapped the imbalance, dropped to the downside. All we want to see is a break of structure. And right here is the break, candle closure. This is the entry. Can you see after it closed, it retested?
Mm-hmm.
And that would be the entry. Stop loss, the high, add a few extra pips above. Now, take profits, go to 1 hour, 4 hour, look for imbalances, mark them out. Now, on the daily, there's a massive imbalance already. So all I did was to mark out daily fair value gap first, because that was already my drawn liquidity, where I was anticipating for price to come down into that position. So, and you can see that imbalance there.
Yeah.
And even though I didn't hold it up to that position, I just closed the trade at equilibrium because